So no watch list introduction today. We're just going to get straight into our watch list. The pairs we're looking at, we've gone back to Euro USD, Aussie USD, Pound USD, obviously Bitcoin. We'll probably dig into Ethereum as well, and then we've obviously got our Japanese yen pairs here. So gold, we normally leave in with stock indices and obviously stock indices. So we've got 4, 7, 12. So we've got 11 kind of instruments we want to go through. Obviously last week, a little bit different. We had our futures up here. We trade those directly through the platform, and we were in between companies before. If you remember, we had that dispute we were talking about. So a lot of last week was going through compliance and trying to get our account sorted. Managed to come to an agreement. There was a misunderstanding. We're back in action, and we can obviously trade our futures through those. For CFDs, we're obviously looking at what we've got on our watch list now, which is what we're going to go through, and we've obviously made adjustments. So we're actually going to go through and mark some of these up as we go, rather than kind of having them pre-analyze and running through them. So, you know, it might be a bit of a longer video, but that's why we're looking to spend a little bit more time, because we're going to make adjustments live this time. So have a look, let us know what you think. We're again just going to kind of provide that market commentary just to give you a bit of an insight of what we think is going to happen and what we might see this week. So we're into our economic calendar this week. We have, as usual, a fairly tame, quiet Monday. Moving into Tuesday, we have durable goods for the USD. Again, a little bit of information, not too worried about this. Unemployment change for the Eurozone for Spain there. And then moving into Wednesday, Thursday and Friday, it gets a bit more juicy, a bit more information that we can start to see, Fed interest rates and so on and so forth. You've obviously got Bank of Canada, Fed FOMC press conference and so on and so forth. You've obviously got inflation for Aussie. Thursday, we've got GDP, lots of Eurozone GDP. So again, keep your eyes peeled for that very early morning for those that are UK-based traders. And then labour figures for the US dollar on Thursday as the US session comes into play. And then again, lots of Eurozone German-based unemployment figures, retail sales and so on and so forth, with core PCE and personal spending for the USD as you come to that overlap session to close out Friday, right? So going back to our watch list, again, we're really focused on these higher timeframes now. We're still no doubt trending. Whether we kind of start to bounce from this 107 on the weekly time frame, we may well do. However, that being said, we've been following the lower time frame mostly on the daily and the 8 hour. So again, we might see a bit of a I don't know how to say this, a bit of an inconsistency to start the week. We might kind of sell off a bit beyond this and then start to climb. But generally speaking, I think as long as we're trading, and it was provisionally 108, we're now at around 107,500. Let's give it, a few hundred, few thousand points or a couple of thousand points, let's say to 106, maybe 106,500, 1,000 to 1,500. We might start to bounce and continue. So for the moment, I am still bullish bias on the dollar, and that's obviously going to lead into things like US30 and so on and so forth. A bit of a spanner in the works when we started to trade a slightly higher than this kind of 44,300 price. We've arguably got that previous 4 hour, 8 hour there, which is what you could possibly argue that is a zone, we're going to be looking to trade from. We're rallying, we're pulling back, we're rallying, we're pulling back, we're rallying. There's no sign of stoppage here, so it would be silly really to try and catch a falling knife, so to speak, as we are still ascending. So therefore, what we'll probably do is try and get entries as close to 45k as possible, and we'll kind of just marry up the dollar index and follow 45k sell zone, right? So as simple as that, 45k sell zone. We're simply going to wait for this alert to trigger 45k. Let's go 45k on the nose, even though we're trading slightly north of that. We're still going to look for that kind of 45k price, right? So 45k is here, and then we trade as much as 45,050. So as soon as that triggers, we're going to be obviously tuning in, seeing what can happen. With regards to stops, we're going to have to scale into a lower time frame. Again, the H8 on US100, so Dow or NASDAQ, we just followed Dow Jones. We're going to be looking to sell from 22,100. So again, 22,100, if we kind of mark that on, we're going to have our alert. And again, what do? Sell zone. Sell zone. This was sell zone 2, and it's now effectively just sell zone. So we've kind of avoided or just almost forgotten this initial sell zone here, but that is going to come in handy as we approach this sell zone, because we're going to be looking to target a bit of a profit taking around 21,900 price around here from that 21,100 sell zone. So we'll see what happens, and we'll just adapt accordingly. Gold, so we're really in that all-time high territory now. We got 21.90. which is obviously going to be, you know, again, that point where we set those alerts. That's kind of approaching all-time territory now, and as we hit these all-time highs, we're always going to be expecting rejections and corrections and so on and so forth. That weekly candle does close higher, 27.70, than previous, which was 27.40, 50-ish, right? So obviously food for thought. We need to bear that in mind and see, you know, if we can get this daily rejection accordingly, it's going to look something similar to what we've got here, which will obviously be attractive, right? It's going to be... So obviously the ideal scenario would be looking for 2800. 2800 obviously being that 100-point psychological level. That would look something similar to this around here, and then obviously we'd be looking to enter like so. I'm going to set alerts for, you know, that price as well, just because this is the previous all-time high. But again, what could happen is we could spike liquidity spike, you know, another 100 points beyond the previous all-time high. That could be, you know, the real pinpoint entry before then selling off. No doubt that is going to offer the best kind of reward potential. Let's say we gave ourselves, I don't know, let's say 75 points as a stop. So again, conservative, but you know, you really open yourself up to really good attractive kind of potential here. And again, the targets would be closer to that $2,700 an ounce. So 850 points from 800 down to 27.15, 85 points or 850 points is really, really attractive. All we can do is see what happens, right? We're now setting our alert. So we're interested to see what happens. Again, if we look at the likes of GBP, Japanese yen, we're still on the daily time frame. We've got our kind of 200 price here, and we've got our, you know, 190 price down here. So as long as this remains, and we're still trading between this range, you know, we're happy to continue, and we've still got obviously our zones in between. So our zones in between, we're obviously looking to use those as like interim zones. So as we, you know, trade from the major support or major resistance, in this case 190 support and 200 resistance, we can simply look to you know, see what's in between, and that's these zones I'm just dragging out now, right? So what we had previously, we came down to that kind of 190 price here, we went below again. Early on in the year, we're going to get caught a few times maybe, but as we start to scale into the lower time frames, we did see an initial rejection, and then we started to trade higher. This is good because again, our interim zones, you know, that we're seeing play from them, right? So we're seeing kind of rejections and what we'd expect. You know, we pushed almost 3R there before breaking obviously higher. And again, you know, if we are now looking to trade from zone to zone, what we'd simply be looking to do is expect price to come back down to that zone, that 193 price, and we'd be looking to catch an entry back up to the next zone, 195, 500, with stops somewhere around here, depending on how we respond as we come back in, right? So again, all we can do is, you know, be ready as a bit of a nice, you know, supply zone here, a bit of support, resistance, and then again, selling pressure all the way down from 194, 700 down to around 190. So again, you know, opportunity there, no doubt. And again, of course, if we're looking to trade higher and beyond this, we're going to be looking to break, pull back and continue. So again, one step at a time, we're looking for something similar to this. Now, USD Japanese yen and US or Euro Japanese yen, again, very, very similar take. We are still ascending or descending, sorry, ascending on the lower time frame, descending still on the higher time frame. We've got some interesting play, but if we were to, you know, start marking on our zones, they would look very briefly something like this. We'd blow this up, and then we've got here 162, 500 price support. Again, support, we break, we come back up, we come back in, we go back up, we support, we bounce, we break, we sell off, we break, we consolidate, we bounce, we come back down, and so on and so forth, right? So what can we do? We can simply look to mark on our major zones, we can look to mark on our supports, and we've already started to identify some sort of, you know, trading range. We're not really too focused with Euro Japanese yen because we obviously like to trade a GBP Japanese yen. It's our, you know, home-based currency, but, you know, we can always, you know, analyze and flick to those as necessary. We've also then got here, using more recent trade price, I'd probably say 156, I'd probably say something like this. You know, that is our interim range, and we've got a range of around here 150 points, 160 points, right? So if we blow this up for the time being, this is what we're looking at, and then again we're going to be looking to trade from ranges around 158. We don't have too much in like good confluence like we do with you know, some other pairs. So, you know, looking at whole numbers, like for example, we've got 155 here, which is good. So buying from 155 is certainly preferred. 155 psych, and then again you've got your support, your demand, and so on and so forth. So this is a good zone to buy from. We'd certainly be happy to do something like that, right? So what we'll do is we'll set our alerts ready for that 155, and then when that triggers, we can reevaluate. We can see what's happening. We can see where we are. Stop losses, as always, we're covering the wicks to the left from recent trade, and we haven't traded below this since, you know, January 16, going back December 24. Okay, so you know that's held during recent trade. You know, we've certainly got the potential to trade higher up towards this zone here, which is almost a 10-hour opportunity. So that's looking really good as well. And then, of course, we've got Euro Japanese yen and GBP Japanese yen. So we're sat prepared there. Now, Euro USD. So if we take a bit more of a look at the USD-based FX pairs, again, this would, you know, generally complement the dollar index shorts. So looking at something similar to this, covering this supply here, you know, covering a bit of trade just above. Initially, we're always going to be targeting the previous lows, and that would look something similar to this, right? And then we've also got our, you know, continuation to the downside. So again, we're only going to target the previous lows initially, which is where we were trading from previously. But let's look at the lower time frames now. What do we see? We've got obviously a bit of a break in structure here. We might even just pull back to around 104, but we're at 105 at the moment. So again, what do we have? You know, we've got this previous area of SR. We're downtrending currently. We've got our 5 or 105 psychological price. You know, it's definitely a good confluence zone. So we can annotate this confluence zone, and we've got, there's no point in setting alerts for this. We're not really too interested in this ourselves for the moment, because we've got our eyes on stock indices. However, you know, if we are comparing it to, you know, Aussie USD, we've got a big zone of break, or zonal break of support here at 065. We're at 105 on Euro USD. What do we have on GBP USD? We've got simply 125. So again, perfect for FX, right? Because we've got various different psychological prices, and what I mean by that is, again, every 500 points, 1,000 points, you know, we've got a good zone to continue this trade short. And again, what we're going to do, we're going to target those previous lows. So again, that would look something similar to this, right? And then of course we've got Bitcoin. So Bitcoin burnt us last week, which is really annoying. Really annoying. If you look at, I think it was even the 15-minute, we whipsawed massively. It was all this action here. So I was trading this quite highly leveraged. I think this is Friday's action. No, this is Thursday. It was on Friday. So where is it on Friday? It's about 1,000 points up and down. It's around here maybe. It was stock market open, so it was around here. So this whipsaw caught us, and then we obviously came back down, and then we were trending and moving sideways. So the point is, on Bitcoin, I think what we'll probably look to do is see if we can capitalize on something short again until we break these all-time high prices. And I'd argue it's, what I'd say is, obviously be aware of the wicks beyond this 106,200 price, because we've wicked as high as 109. And don't get me wrong, you know, we're talking best part of $3,000. So when you see this, you think, all right, we're breaking now. But just bear in mind that we've wicked once, twice, 3 times, 4 times, and we haven't managed to sustain a break beyond, you know, 110 kind of territory, right? So, you know, I'd like to, if we're playing aggressive, we could see something like this. Obviously, when markets come to normal volume, we're going to certainly see these wicks unfold again. So it's dangerous. We could be a bit more conservative, but we've then got a $2,500, $600 stop loss. The risk reward isn't great. So what can we do? You know, we've just got to play it carefully and, you know, hold on to those longer term, lower leveraged positions. So I'm going to wrap it up there. I've gone through quite a bit, and I'm quite happy with where we are. It might just be a bit of a waiting game to start the week, because obviously we're preferred $2,800 on gold. You know, we're preferred this 45k on US30. We've preferred this 22,100 price on NASDAQ. So remember, you know, whilst we are only, you know, 330 points away, we can certainly see that in a single day. So whilst it might seem we're quite far away, you know, here, for example, on NASDAQ, you've got 400 points, which is more than what we need. Here, the next day, you've seen as much as 250, almost what we need. And again, you've got this massive wick here. You've got over 4,000 points or 400 points. So it won't take long. And the point is, we've got FX, we've got confluences, you know, across FX and various different pairs. Obviously, stock indices perform in a slightly different way, but it's certainly you know, food for thought, and we'll see what happens as we you know, progress into this week. So I hope you all have a very good trading week ahead. As always, follow the series. We've got our 25k challenge, we've got our weekly watch list video, and we've got lots more over on our socials as well. So check it out. Let us know what you think. Leave a comment down below, and we'll see you on the next one.